Good morning, traders. It's the 8th of February. We are Signal Centre Talking Bull. I'm Joe, joined by Steve. How you doing this morning, Steve?
Yeah, not bad, thanks, mate.
Good.
Yeah, a little bit sore after yesterday. We'll discuss it over gun to head, but
Yes.
yeah, apart from that, tickety-boo.
Excellent. Good to hear. Okay, let's get into the latest headlines here before moving on to some charts to take a look at markets on a technical basis. First up, the headlines though. So Fed Chair Powell spoke yesterday, and really markets were braced throughout the day for what it was he had to say. And he just repeated comments really that disinflation process is underway in the economy, but also that it has a long way to go. In particular, Powell stated that the Fed is not seeing disinflation in the core services sector and that rates will need to stay high to achieve it. He added that the lack of progress in core services, excluding housing, is what worries him, although he is more confident of disinflation in the housing sector. He reiterated that the central bank is data dependent and that rates could be raised higher than is priced in if the data is stronger than expected. He also considered that the labour market remains extremely tight and this may be a structural issue. He did, however, add that wages increased have reduced to a level closer to a sustainable level. We had one of the Fed members, the Minneapolis Fed president, stated that the central bank will have to do more on interest rates if financial conditions are easier. He added that it was more cautious than markets on the rate path, especially with wages growth still strong, while the housing market is starting to show signs of life again. In Canada, the Bank of Canada governor stated that interest rates will not need to increase further if the economy develops as expected and the inflation falls as predicted. He added that the bank needs time to assess the rate impact on household and firms. As a result of all of this yesterday, there was some pretty choppy trading in the dollar and other asset classes as well, actually, during the comments, with an initial slide in the dollar followed by a surge higher. But the US currency was unable to hold on to those gains and there was limited net change on the day. We do have further Fed comments today. That will be coming from the New York Fed President Williams. That will be the main focus for today's session. Around 2:15 UK time is when we're expecting him to speak. Okay, so let's get into the chart, Steve. Let's take a look at how things are shaping up. We've got a couple of requests coming in for markets already. We will definitely get to those. That's sterling, euro, US dollar, and gold. We will start off with cryptocurrencies, but if there's any other requests, guys, please feel free to post them up and we will do our very best to get to those throughout the course of the stream.
Yeah.
Okay, Steve, let's talk crypto.
Yeah, just seeing that gold has crossed 1886. That's triggered our intraday trade idea. We'll dive down into that in a short while. Won't have to wait long. Don't worry. But yeah, obviously we've sort of like decided that the cryptocurrency or Bitcoin in particular is a risk asset now. That was decided to us by the powers that be. The market just seems to, every time the equity markets take a lift, Bitcoin follows. Doesn't make any real sense. There is a base behind that, but we don't want to dive into that today. Haven't got time, unfortunately. But yesterday's price action on Bitcoin was pretty good. Overall, we ended up with a bullish engulfing candle. You see this large green candle engulfs the previous day's price action or previous day's body. So that's a positive candle, leaving us with if this was a doji yesterday, it'd be a lot simpler, a morning doji formation, morning doji star formation. But it's a little bit of a chunky body here, so not quite, but we can see that a lot of price action has taken place with this volume indicator on the right. I've left it on there from yesterday, Joe. It's sort of like sometimes it's quite a nice thing to sort of like really see where we're going to get these break levels and these aggressive moves. Tomorrow we should have the confirmation of a golden cross in Bitcoin, which is positive for the medium term, so that's good. And yeah, we've had a little bit of a spike high this morning. We've pulled back, so really waiting for that next wave of momentum to carry this higher. On the short-term charts, we are just below the Ichimoku cloud. We can see like a shooting star candle from the midnight candle last night for 4 hours. Hit the Ichimoku cloud and reversed sharply lower. So a bit of work to do there still to get this in a bullish trend. Really above the Ichimoku cloud would be a bullish trend. But you can see this sort of like flat lining of price action or resistance support on the cloud, and that's basically where the cloud projects forward support and resistance, and it's a result really of the price action. Since January, the 20th of January, we've had this sideways price action in Bitcoin. Really haven't gone very far indeed after we broke through that 20,000 level, 21,000 level. So yeah, overall, well, the hourly chart looking positive above the Ichimoku cloud, looking quite nice. You'll probably get support all the way down here. 23,000 in front of 23,000, that'd be dip buying territory, although 23,144 would also be resistance turned into support. Watch out for that. Gold has been requested. Let's talk about that. I don't know what our intraday trade idea is in gold. Let's take a quick look. Off screen, we were looking to sell at 1886 with a stop at 1901. We're targeting a move to 1842, and so we've had a spike higher, and that's worked out quite nice really. It sort of like seems to have stalled right at the level that we were looking to sell at. We've got cloud resistance here, and that's on the hourly chart, but let's take a look what's really going on the daily chart. Is it something part of a bigger move? We'll sort of we can see that we broke down on last Thursday, non-farm payroll. We obviously catapulted through the resistance around $1,900, and the last 3 days have been constructive. They're inverted hammers, which are, as I said yesterday, they're quite bullish candles. Although they don't look it, it looks like they've sort of attempted higher and failed. That is the case, obviously, but these attempts higher, and the sort of like the fact that the market doesn't go back below the previous day's low is a positive sign, and it looks a little bit more positive this morning, but we have run into a bit of resistance as we see, and rejecting that at the moment. Overall, on a medium-term basis, we're still in an uptrend. On a long-term basis, we're still in an uptrend. We've got a moving average, quite a big one, 55-day moving average, coming in around about the 1842 level. There's also support there in the shape of the 50% Fibonacci retracement level. So yeah, looking quite positive overall with gold. However, we have stalled at resistance. Intraday may get a little bit of a pullback. Silver, same sort of price action in silver. Looking at the daily chart, we've engulfed yesterday's price action completely, and it's looking quite nice and trying to move up. We should get some resistance coming in around about the $23 level. Well, $22.75 to $23, this little gap here, which we can see in the volume indicator on the right-hand side. Yeah, so this is overall, it's bouncing off this wide band of support we've got here. We should really narrow that down. Let's bring it down to here. That's the support level, and we're below the 55-day moving average, but we have started off nicely this morning, so looking pretty good. And copper has had a really nice reversal. This is more like the morning doji style reversal that we were talking about. The doji candle on the 6th of Feb, Tuesday's price action and move higher forms that nice formation. So looking to sort of like for a further upside really on copper also, with a nice formation forming there. Crude oil had a turnaround yesterday, and again we could look at it this morning. Star formation. This is like a little bit like a shooting, sorry, a bullish hammer here, and we've projected really aggressively higher yesterday, almost like a Marabuzo type candle, where the market opens at the low and closes at the high. Really strong candles, and normally we could expect support to kick in from this candle the next day, around about 50% of that candle's move. So around about the 76.20, 25 area, we'd expect some decent support here, and again supported by the volume indicator on the right hand side. We're above the 55-day moving average, looking quite tasty on the crude oil. Potential for further upside. However, it's Wednesday. We always get a little bit of a hiccup on Wednesday, whichever way we're going. And it seems to be that the oil inventory is released in the afternoon around 3:30 UK time. Always land a load of volatility with it. So this attempt to move higher, it stalled around. We talked about this. It stalled around this support level. and it's turned out quite positive at the moment. The risk is a break back below 72.50 would open up the downside quite aggressively. That's on WTI crude oil, but at the moment it's looking short-term quite favourable. Again, same sort of price action on Brent crude oil, and we've broken above Friday's non-farm payroll high, just pulled back from there, but looking quite good, and resistance really not kicking in until about 87 to $89. So a little bit of room on the upside maybe for Brent crude oil. Again, you could look at this on a different basis, looking to sell into these rallies, but there may be a little bit of opportunity here, but obviously the risk is quite a long way away. This is where your risk level is, down at $79. So getting long at these levels is a little bit aggressive. Natural gas has actually stalled on the downside and turning around quite nicely. Still sort of not really confident with this one, but the risk reward is obviously great. We've had this really aggressive sell-off. We are due a correction. We've still got this big gap on the chart, which is like glaring. So I think at some point in the not too distant future, we may have a little bit of an attempt to fill that gap. But at the moment, it's yeah, I mean, it's offering great risk reward, but very risky indeed. So that about covers off the commodities, Joe. Maybe the dollar, having a look at the dollar, which seems to have pulled back slightly, lending a little bit of supportive mode to the commodities.
Yeah,
Can give us a little bit of indication.
let's do that. So let's take a look at FX then. So dollar index, as we know, is or was in corrective mode. I don't know what's happened here. Has there been a change in my charts? Right, okay, all sorted. Right, so big bounce that we saw last week, which triggered really on Thursday. We saw this piercing line candle. We then backed it up with further gains on the Friday. We did see decent price action again on Monday, but yesterday we run into a bit of resistance and formed what looks to be a bit of a doji candle. So we rallied into some previous lows in here, also a short-term downtrend just coming up shy of that. And we've seen a little bit of a pullback. Nothing drastic, certainly not anything that's engulfed all of the previous few days of gains that we've seen. So all in all, there is still potential for maybe higher prices towards this 38.2% fib level at 106.15. So all in all, bit of a pause for breath potentially in the dollar. Our longer term view is that there is a top pattern in place and potentially lower prices could be seen here on the dollar index. But in the short term, maybe potential for a bit more of a corrective move to the upside, unless of course we do fail into this downtrend resistance, at which point we'll expect prices to continue moving lower in line with the dominant trend. Let's take a look at euro US dollar. So we know that that stalled last week as well, given that we saw that rally in the dollar index. We broke the short-term uptrend here. And yesterday, again, we posted a doji candle, bit of indecision here, just below a support level that we've got drawn on at 103.36. Attempting to make some ground today, up by 0.22% as things stand. Again, we've got another Fed speaker today, so that could create more volatility, although it's likely that they may just continue to repeat the line that we've seen towed from Jerome Powell, in that disinflation is in process, but they need to see more evidence, etc., etc. So a bit of a pullback here to support. If this continues to hold, if we can close above yesterday's high, then that may indicate we've got a short-term bottom in place, and maybe we can start testing new resistance at 108.85. Let's take a look at cable. So we've seen a break of trend here. Yesterday we did post what looks to be an engulfing candle actually, and prices are continuing to move higher. I've got some arrows drawn on here to indicate where prices may go. We've got this support here at 118.42, and why that's relevant is because if we breach that level, then we will have confirmed a short-term double top, which would indicate that prices may move down to 112.36. So it hasn't completed that for the time being. Therefore, I guess we need to stick with our bias that we are still trading in a sequence or an uptrend sequence, but there is some choppiness going on here, some sideways price action, which may indicate a topping formation, but it's a little bit too early to say for now. I think, given that we've seen the break of trend, my preference would be to sell into rallies towards 122.93. Let's take a look now at dollar yen. So we can see here that we were trading within a bearish channel. We've then seen a break to the upside, a little triangle pattern here, or ending wedge that saw prices break to the upside. We then pushed higher on the Monday before pulling back to fill that gap that was created at around 130, 160. We've now overshot that gap, but we have found some support at a previous resistance at around 130.39. So it'd be interesting to see if that continues to hold. I think given the break of the channel and the break of the triangle, I'm still, I think, looking for higher prices here in the short term, because it is such a nice sort of technical setup that we've seen, and some breakout of some interesting levels. So therefore, my preference would be really to buy into dips, potentially as low as 129.13 in expectation of higher prices. So if I was looking to set up a trade idea today based on the daily chart, I'd potentially be looking at something like this, buying on a dip to that 120.16 level, and then looking for a reasonable correction of this channel. Let's get some fibs on. So the first level for me would be that 38.2. So from a risk reward perspective, looking at potential 3.2 to 1 setup there if you're patient enough and waiting for a dip down to that 129.15 level. Any other currencies should we check out? Let's take a look at Aussie, shall we, against the US dollar. So we did see a break of trend here, and we rallied yesterday to test the reverse side of that broken trend, and now we're back above it. So few warning signs here with the break of trend, but it looks to want to be rallying higher. I would maybe target a move to around 70.76. I think if we are going to sell off again, then that would kind of be the last point at which I'd want to be thinking about getting short. So those are always the kind of ideal entry levels for me. You know, getting in as close to the point where I think I'm going to be wrong, and looking for things to play out from there. So I'm still maybe of a bearish opinion on that. Still looking for maybe a little bit more from the dollar index on the upside, but I could be wrong. It's all pretty choppy out there at the moment, so do tread carefully and just look for extreme entry levels. I think as very close to those resistance and support levels as you can possibly get. Okay, want to take a look at indices, Steve?
Yeah, I'll have a look at indices now. FTSE we'll start with, and new all-time high in FTSE, got up to 79.25.5 yesterday, pulled back from there. Sorry, that's today we've done that. Pulled back from there overnight, but we're still looking pretty rosy, pretty decent up there. Obviously, from a cloud perspective, trend perspective, short-term, long-term, and medium-term charts are all indicating we are in a bullish trend. Let's just get the cloud on the daily chart here. You can see well into that. You can, we should expect with posting of all-time highs on a weekly basis. Last week was very, very strong. This week we had a dip down into test support on that, and got down to just above the 7,800 level, and then we've rallied higher from there. So looking very positive on the FTSE. DAX in the last couple of hours has had a bit of a sell-off, and on the 4-hour chart we can see that we are forming a bit of a evening doji star formation. So that's looks pretty negative at the moment, maybe just in search of reassurance from the bulls that the market's moving in or heading in the right direction. Only small down on the day at the moment. Taking a look at the daily chart, looking very good indeed. Obviously we had the golden cross back in the mid-December time, and this is continuing to push higher. We're above the 78.6% fib retracement level. This is getting a bit messy, this candle, when we bring in the volume on the right hand side, but you can see we're sort of like at the I suppose we can call them point of control levels if we want, or unless there's a trademark on that term. 15,727 around that area. 15,750 would be the next key resistance in my eyes, which would be the swing failure from the 2nd of Feb last year. Then obviously the all-time highs sitting up around about just under the 16,300 level, but that just feels like we're continuing in that mode. Would take you know, a serious bit of bad news for this to turn around at the moment. Even the US is seems to be slightly convinced by it. We had a nice turnaround yesterday. There was, I mean, the volatility in the Dow was pretty whippy yesterday. I think I'll just show you the hourly chart. which would have caused a few nosebleeds. This support level that we had from Monday, you'd think, right, okay, maybe place my stop below there. Well, over this, you think you're well on the way to the races after the 5 o'clock candle, and then huge reversal, and then a huge bounce back. I mean, that's sort of like 2 or 3 hours of price action would have left everyone a little bit battered and bruised. Even if you sort of like were looking to buy dips around the support level, if your stop was too tight, then you would have been stopped out. And but you know, overall, it's sitting above the hourly chart on a short-term basis. 4-hour chart, it's sitting above the cloud as well. So looking pretty positive. Nasdaq, similar sort of price action we can see, and this continues to move higher nicely. Support now coming in, as we mentioned yesterday, around about the 12,400 level. That's where dip buyers will be looking to step in, targeting really a move to this resistance all the way up at 12,900. Looking at S&P, similar sort of price action to the Nasdaq, in fact, rather than the Dow, and a nice little bit of supportive price action from the previous day's candle, coming in at 4,087. That's the low. That's the level to watch on the downside. Buying dips in front of that, and looking to take out the resistance around about this 4,200 level. Apart from that, maybe there was one that wasn't looking so great. China 50, Hang Seng, and yeah, China 50 Hang Seng seem to be battling with everything that's going on, although we're going to get a golden cross on the China 50, so maybe that'll support the price action at the moment, which is still positive. We had this inverse head and shoulders, moved higher, and nailed the measured move target at 40,436, but since then it's been sayonara, baby. So let's just see how that plays out. There's obviously, you know, we've got the global, we still have that global backdrop of what's going on in China and the US, and trade wars still bubbling underneath. So yeah, just a case of sort of like, it seems to be the US's turn to lead the way. That's about it. Any other requests?
Yeah, just one for New Zealand dollar, US dollar, which I'll get back to, just covering some more effects. So interesting chart, actually. This is the daily chart. So we can see long term, the trend is negative. We've got a sequence here of lower highs and lower lows. The rally back in recent weeks has been obviously fairly substantial. But if we look at last week's chart on the candle, we can see that we posted a swing failure. We made a new high above these previous resistance levels and actually closed very much in the red, a big reversal there. So that generally sets the tone for me, and I believe that lower prices will now be seen. I've got a resistance at 64.37, so that's where I'll be potentially looking to reload on some shorts. If we take a look at the daily, we can again see that swing failure which occurred there on Thursday. So we made a new high above that previous resistance. We failed. We then moved lower. So the price action in the last couple of days has been, although positive, not really doing enough to get back above and reverse this reversal candle that we saw last week. So I think my outlook there remains bearish, unless, of course, we break through 65.30, then we can start looking potentially for higher prices. So like with the Aussie dollar chart, looking to sell potentially into rallies on this. Okay, Steve, we've got to talk about it. The gun to the head challenge. Yeah, sadly we do. So this is where Steve and I pick trade ideas live on the video, as if we had a gun to our head. What would we trade right now? Each of the ideas that we come up with must have a stop and a target. They're all placed at market, and we're always looking for risk-reward ratios that are better than 2 to 1. Now, the approach that we take with this is very much a set and forget approach. So we will trade these markets on a real basis, in a live fashion. We've got our trading account set up to execute directly via TradingView. We put £2,000 in an account at the start of 2023, and we had a good couple of wins on Monday. Was it now, Steve? Monday we had a
no, Friday.
No, Friday, wasn't it? Yeah, sorry, non-farm payrolls. So we don't touch these trades without the trading day. They just expire at 9 p.m. We've got an expert advisor running on the account, which closes off any open trades at that time. So, Steve, let's talk about trades that we did yesterday. So, I was trading, I can't remember, oil. I was looking at oil yesterday. So, let me just bring up the chart there. Not really much to talk about. It was pretty straightforward. I ended up getting stopped. Let's bring up the chart. So, I was looking at a short-term downtrend here on oil, expecting the gains to be capped and for lower prices to be seen. Initially, it worked quite nicely. We've got a decent reaction to the downside between sort of 9 and 10 a.m. Let's get the hourly up. And then prices just ripped through and we saw a decent impulsive move higher following the break. So that's pretty routine, pretty straightforward. That's what can happen on these ideas. I'll put that one to bed. I'll forget about it. But Steve's is a little bit more
Painful.
yeah, a little bit heartbreaking, I would say. Yeah. So, Steve, bring up the chart. Talk us through it.
Oh, I don't know if I
Oh,
can.
it's
I don't know if I've
hurting,
got the
isn't it? Do you want me
energy.
to do it for you?
No, I'll do it. I'll do it. Let me bring it up. So, yeah, it's on here. Oh no, it's on the Orlando one, isn't it? Here we go. Sterling Oz. Obviously, if you look at it very quickly, you sort of think, oh, good call, Steve. You sort of like you sold it up here and you hit the target down here, and then it rallied and went through your stop by 5 or 6 ticks, and then sort of like followed through on the downside. So pretty much you must have nailed it, Steve, but no, hey ho. Let's take a little bit of a breakdown and let's see. This candle here didn't actually hit the target. Low of 172.89.2, and my target was 172.88.6. So
Less than a tick.
less than a Nats member. So yeah, just it's funny, on a couple of other broker platforms I saw that it did actually trade at that 78. Oh, there's my little right. So I'll have to work out how to do this, Joe. It probably stopped me from crying live on TV. So that's a bad thing. But yeah, so yeah, very, very frustrating, and it sort of does beg the question: shouldn't we be managing these trades? But listen, we've got this approach. It's worked over the sort of like a period of a decent 3-year period, and yeah, you get moments like this, but then you also get moments where maybe it doesn't just quite get stopped out. So it works overall. It should sort of even itself out. But yeah, it's a tough one to take. I'm not going to lie.
That was a kick in the nether regions, wasn't it? That I mean,
Yeah.
yeah, that's the game, Steve. We have this set and forget approach. If we were to start managing trades and protecting profits along the way, we would need to devise a thorough process and make sure that process works over time. The approach that we do take, we've got evidence that it does work, so we just have to take that one on the chin, I think, which is a painful blow for sure.
Yeah, it's funny. Yesterday I was talking about my sort of average risk reward wins over time. I went back to 2015, looked at it, and I think I said mine was on average. I think for single center is around about 2.8. And mine was 2.3. So I said, look, I should really go maybe somewhere in the middle, 2.5. I went for 2.61 yesterday. Now, if I'd have gone for 2.5, Joe, like I said yesterday on the show, then I would have been all right. I would have been sitting here crying inwardly.
And that's a classic thing that happens with traders. They have a plan in place, and then when it comes to the execution of it, it's not always as they should have as we planned, and that is a lesson for you there, Steve.
Yes, yeah, very harsh one.
You won't do it again, will you?
Won't do it again, Joe. Promise.
So you got a nice 5-1 for us today?
Yeah, exactly. Gonna go for it today. No, I'm sort of I'm a little bit out there. The dollar concerns me now because we sort of like had that huge volatility, and people seem to have accepted that we're going to get more rate hikes, and the dollar's sort of like weakened on the back of it. Obviously, you'd expect dollar to move higher on the back of more rate hikes. So the dollar is in a bit of a quandary at the moment. So I'm starting to really sort of like think about, are we going to get sort of like another dive in the dollar? So the one that sort of like really highlighted, I'm looking at the dollar crosses, obviously. Australian dollar, obviously, baby, you're going higher. maybe dollar going weaker. Maybe this is the one to watch for me. We've got a nice little formation here on Aussie dollar. Might be stealing one of yours, Joe. I don't even know. But for me, this is like a nice. I always like when I'm desperate, always look for inverse head and shoulders formations. So here we've got this nice little inverse head and shoulders formation. We had the right shoulder form, break through the neckline, everyone getting carried away thinking, yeah, we're going higher. Measured move target for this would be, measured move target for this would be around 70.43. But then, right, cut back and a retest, obviously with that dollar sort of spiked higher, but then we seem to be trending higher again. We're above the Ichimoku cloud on the hourly chart, not on above it on the 4-hour chart, but this is looking quite promising for me. And obviously buying a break of the 69.88 would be quite a nice risk reward strategy, but you'd have to have your stop pretty close. So I'm going to go for a long in the Aussie dollar. I'm going to go, with what you spoke about about the Australian dollar looking quite nice at the start of the week, Joe, and going to keep in that theme. I feel like I can't sell sterling Aussie dollar again, so that's hurt me. So I'm going to ignore that today. But I'm going to put the stop in. The stop has to be around about 69. Where are we trading now? 69.86, 69.46 for level, something like that. 400. See, that'd be the. I mean, that's a lot higher than the sort of like inverse head and shoulders measured move target, but that gives me a 2.5 to 1 risk reward. I've got to move it down as I'm speaking now, which isn't a bad thing. But I'm going to sort of like do this trade, try and put it on now. The levels have moved somewhat, so let's try and do it live, Joe. On this, let's log in.
So we got our balance up to 2015 as a result of the big moves that we had on non-farm payrolls, didn't we? I guess we've
and at one point yesterday it was trading around about 2060. Yeah, we're down at 1941 again, so not great. We're having a little bit of a pullback on this at the moment, so it gives me an opportunity to really get in. But I'm going to keep the 2.5 to 1 risk reward. I'm going to try and not stop it. Let's see if I can get it on here. We're going to buy this at market. Put the take profit stop loss 1% risk, which gives us a. I mean, that's so. How does this work? So our stop is going to be around about. Where is it? 69.40. Right. Okay. Around about there, we want to do 1% risk reward. Stop at 69.40, and the target at 70.80. So how's this working out, Joe? It's given us a
2.12 risk reward, yeah.
Yeah, 2.12. That's sort of like not quite the 2.5 that I was hoping for, but I'm going to go for it anyway. Just going to stick it in there, son, because when the market moves away from where the levels are, obviously the risk reward adjusts. So yeah, that's the trade. I'm going to adjust this to reflect what the trade is that we put on, and then I'm going to publish it. So you can all sort of like enjoy my jubilation as we hit the target later on in the day.
Lovely. Okay, Steve, I'm going to take a look at sterling CAD. If you can bring the chart up for that for me, just to get ready, get your finger on the button. So we spoke about this yesterday. I think it was Craig who was watching who brought this up as a market to watch, and I spoke about this potential double top because we were potentially breaking down through 161.01 yesterday, but I said do keep an eye on this because you could potentially get a swing failure. If we see a move below that support and a close back above it, then we could have a swing failure, which could maybe set up a reverse or a counter trend move. And if we look at yesterday's price action, we can see that we made new lows on the day, closed above that support level, and now we're pushing higher up by 0.25% as things stand. So potentially there, we've found a decent level of support, which could trigger a little bit of a move to the upside. I was also a little bit concerned about the potential for this double top, given that there was a bit of a vacuum on the volume side of things. I brought up the fixed fixed range volume profile going from the low that we posted at the budget disaster to the current price. And the one thing that I highlighted on here was that there was a zone in here which maybe indicated that there was a bit of a vacuum in the volume, which meant that if there was a break lower and a close below that level, we could see quite a fast move down to potentially around 156.39. But that didn't happen. We closed above the level. So let's take a look at the intradays just to see if we can set something up. So looking at the price action over the last 24 hours, it looks as though we may be forming some sort of short-term bottom here, bit of a rounded kind of bottom formation. If we take a look at the periodic volume over the last 20 sessions or 20 periods, we can see that the volume point of control or the volume nodes are building around this area, which suggests that a base is potentially forming. Over the last hour, we've seen a little bit of an uptick in price, which is quite encouraging. We do have resistance quite close by at 162.17, which if we can get through, again, there's these kind of vacuums where price could accelerate quite quickly to the upside. So I'm going to have a go at buying this. It's currently trading at 161.73. My target is going to be a move up to 163.46. And ideally, I'd have a stop loss below the low, but because I want my risk reward to be a bit better than that, I'm going to go with a stop loss at 161.11, giving me a risk reward ratio of around 2.82.
Which target, Joe?
It's 163.46.
2.6 to 1 I've got here.
Perfect. So just adjusting for the spread, I've got 2.82.
I just clicked it when you said perfect. I thought I'm not going to even look at that. But if you look at my chart, Joe, I've seen this obviously in inverse head and shoulders formation.
Yeah,
we all like them.
We do.
Measured move target for that. Would be around about 163.13. Your target is
46.
Yeah, a little bit higher than
so
that.
Maybe a 61.8% extension of that, maybe somewhere close.
Yeah,
that'll do. Anyway, yeah, like the looks of that, based on the fact that we got that swing failure on the daily chart yesterday. So let's see how that goes. Okay, let's kick this on, Steve. Let's take a look at the day ahead. So it is, again, all eyes on the Fed. We've got the New York Fed President Williams speaking at 2:15 UK time. So that is likely to bring with it some volatility. If Powell's speech is anything to go by yesterday, it really was 3 hours of madness and really big ranges on most markets yesterday that were linked to the US dollar. So please do be careful of that. Keep your wits about you. That's happening at 2:15. Then at 3:30 UK time, we've got the EIA crude oil inventory numbers. So if anybody's trading oil or anything linked to energy, do be careful because that could create some volatility as well. Then we have a couple of days of not really a lot going on. The focus will then be on the Canadian employment report on Friday, as well as the latest read on the UK GDP number. So that is that for today, Steve.
Lovely. Nice one, Joe.
Okay, thank you everybody for watching. It's a pleasure as always. Please keep getting your comments in, asking us for ideas and views on various markets. We're very happy to help. So hopefully we'll see you all again tomorrow morning.
Cheers all.
Bye-bye.